Yeah, so you all welcome. So let's continue. Right? Mitigated and unmitigated order blocks. Then we look into life on the charts, what you've just been explained to, right? Mitigated and unmitigated order blocks. Copy. Okay. Now I'll be removing these things. Because we've talked about them, right? Yeah, we have. So let's change the topic here. Mitigated and unmitigated order blocks. I think these to be. So yeah, I need to get off some of these things here. Some of these things at this point. Right, and let's do the same for this one. Okay, so now I've removed everything here. So proceeding with mitigated and unmitigated other blocks, right? Now we'll be using the word mitigated when something has been tapped on, when something is being touched, right? And the unmitigated, right, when something is still clear, yet to receive any piercing or anything, right? Yeah. So when we talk of unmitigated and unmitigated other blocks, right, we are looking at other blocks that have been touched on, right? Other blocks that have played, other blocks that have been used, right? Used other block, right? And when we talk of unmitigated other blocks, we are looking at other blocks that have not yet been used. They are yet to be, right? Yeah. So and now we have things like this. If you look at this other block here that traded far from this after the formation, traded far, it's have remember other blocks when they form, it signifies like whenever they are forming, right, price will reverse, right? Yeah. So as these other blocks just formed, price will reverse to the upside. And what you'll be expecting is price to touch into this zone, right? Price to come back and trade inside this zone before going to the upside, right? Now, as price is like this at this point, as the other block has not yet been mitigated, has not yet been tapped into, right? Here now you can call this an unmitigated other block, right? It is yet to fill. Price is yet to consolidate inside of here, then tap inside of it, right? And then we go to the upside, right? So this other block at this point is an unmitigated other block, right? And when it becomes mitigated, it's when price taps into it, right? Then at this point, when price taps into it, right, the action occurred at this point. When price tapped into it, meaning price has picked orders from this other block, right? And now this other block has been used, right? It has been used. So either when you're trying to look for another other block, you'll be looking for a new one, right? A new one be formed at this point. You'll be looking for a new one. But at this point here, right, price has tapped into this other block here. And when this thing wasn't there, right, you can see that the other block is clean. And at this point, you call this an unmitigated other block, right? Same goes with this. At prices like this, right, after the other block formed, as the order block was forming, price started reversing, right? And then you expect price to trade back inside of this bearish order block and then sell to the downside, right? Now the price has not traded back into this order block, this bearish order block. Here it remains unmitigated, right? And as price taps into it, right, to activate sell orders in the market, right? Now it's as price taps into this order block, it tends to be a mitigated order block, right? A mitigated order block, and it's happen. Then that is when you call the order block. It's a used one, and you won't be using the same order block again. You'll be looking for another order block, right? Although you can use same order blocks more than once, but I won't be talking about that, right? So now we call this a mitigated order block. Why? Because price has tapped into it. Price has traded back into the order block, into the bearish order block, and has activated itself by tapping inside the order block, and will be dropping to the downside, right? Will be dropping to the downside. We'll be selling to the downside. Yeah, we'll be selling to the downside. Okay, so we'll be selling to the downside. And as this one is here at this point, right, it's unmitigated. And for it to be mitigated, price you have to sell to this zone, then buy to the upside, right? Price you have to buy from this zone by mitigating this bullish order block, and then we go to the upside, right? So you expect something like this to happen. Right now, let's quickly dive into the live charts, right, and spot out all these things we've said, right? How to identify order blocks, setting trade entries and stop loss using order blocks, right? And that will bring me back to this support and resistance level. These support and resistance levels. Oh my God, what am I doing? Okay, so looking at this support and resistance level, right? Let me take out something. So looking at the support and resistance level, right? You have an order block at all of these points, right? At all of these points, right? You have an order block at all of these points. And this zone now, there is an order block there, right? There is an order block at this point. That after this order block formed at this after this order block formed at this supply zone, at this resistance zone, price traded out of it and then came back to trade inside of it before selling to the downside, right? And price, you also have an order block correlating from here to this side. Remember, it's not from this same zone again. We have another block from this same point to this point. Price coming back after trading far from it. Price will come back to trade inside of it again before selling, right? We all have other blocks at this point, right? Bullish order block for this one, right? Price will, after price has formed this other block at this point, price will trade far from it, right? Price will also come back, mitigate it once more. Price will come back to tap on the other block before buying to the upside again, right? Price to come back, tap on it, and go to the upside, and then start trading to the upside, right? All of these joints, other blocks are in them, right? All of these joints, other blocks are in them. You see all of these joints you are seeing here, other blocks will be all at this point, because as other blocks forms, price tends to reverse. Remember, they also show reversal signs, right? On a normal scale, if I'm to look into one of these structures, I'm trying to make this thing tiny. Okay, so if I'm to look into just one of these structures, you see that we are in a downtrend. And order block formed at this point, a bullish order block formed at this point, right? Formed at this point before we trade to the upside, right? We're in a downtrend. And for this price to reverse, a bullish order block will form, then we start reversing to the upside, right? We're in a downtrend. For this place to reverse, we form a bullish order block, and then we start going to the upside. Now, the opposite goes for a sell, right? We're in a we sell, right? We are in an uptrend. For this price to sell, we'll form a bearish order block. Here we are forming bullish order block. We'll form a bearish order block. And this bearish order block will indicate a sell, right? We're in a bullish trend. For this thing to sell, form a bearish order block, right? And we sell, right? We are in an uptrend at this point. For this thing to sell, form a bearish order block and we sell, right? Then we reverse. The reverse happens to be the case here. We are in a bullish trend at this point, right? Sorry, we are in a bearish trend at this point. For this thing to buy, we form an order block in this last, remember the last traded candle, right? Before the up move, that way to be formed here, right? Before we see the up move, right? So same system that these things follow, same system. So let's quickly dive into the live charts. Quickly dive into the live charts, right? Let's quickly dive into the live charts before even going deeper. We've seen several of them already. We've seen several of them forming already, right? Look at this. Look at this thing now. Here, here is an order block at this point. You see this thing here. This is an order block, and price tapped into this order block. Look at, after this order block formed, price sold, so that price traded out of it, right? Price traded out of the order block, and sorry, price traded out of the order block, and then price traded inside of it before we sold to the downside, right? Right, price traded out of this order block, right? And price came back to activate the sell, right? We also have another order block at this point, right? We have another order block at this point, and you see, looking at this thing, it's like a supply, it's like a resistance zone already with several touches, right? Several touches. You could see several of all of these touches here, several of these touches at this point. So an order block is at this point, right? An order block is at this point, which price activates, and then we are selling to the downside. Price activated this one first. After this bearish order block formed, price activated it and sold to the downside, right? And here again, price is coming back to sell from the same zone, and we are dropping to the downside. Same thing will happen to okay, let's look for a bullish order block. Okay, let's look out for bearish order block completely, right? Here we have a bearish order block at this point, a bearish order block. And what did price did? We had a bearish order block that is found to use every of these things. This is a full order block at this point, right? Yeah, so but then if I want to pick one, right, this is just one here, a tiny one at this point, right? Which price reacted from, right? Even if price invalidated, the price reacted from there. We also have another order block at this point, right? Just this one. But then you could see that after this other block formed at this point, after this other block formed at this point, right? After this other block formed, price traded out of it, then came inside to mitigate it with this candle before selling to the downside, right? And as price is selling to the downside, we also had another order block, right? A bearish order block. The price after selling from it came back and traded inside of it before selling to the downside, right? So these are your order blocks formations are. Now let's look at bullish order blocks. Bullish order blocks. We have one here, right? We have one at this point. We have one at this point, right? After we are in a downtrend, a minor downtrend, and this was the last candlestick before the up move, right? A bullish candlestick before this up move, and price came back after price traded out of it. Price came back and traded inside of it before going to the upside, right? And we also experienced a buy move from it again, right? We also experienced price buying inside of this other block again, this bullish other block. Price bought inside of it. Price bought inside of this other block and went to the upside, right? Now, same goes with this one at this point, right? Same goes with this other block at this point. Price reacted on this other block. This is bullish other block. The last candle before price reversed, right? This is the last candle that price formed before reversing to the upside, right? Same goes with this one. This candlestick you are seeing here, right? Several of them all. You could spot them as much as you want. Bullish other blocks. Bullish other blocks. I don't know if I should scroll to a higher time frame, like 1 hour time frame, 2 hour time frame. Okay, let's try 1 hour. Hope everything I've just marked out doesn't fall together. So now let's look at bullish order blocks. Let's look out for bullish order blocks, right? We have them here. We have them here, right? We have them here. The last candlestick that price formed, and we price came back, reacted to this order block at this point, right? Price, there is what we call snipe entries, right? Yeah, so price gave a snipe. Price just sniped that other block little, and then went to the upside, right? And then price traded there again. Price traded there again. Okay, let's say we drag this thing out, right? Price traded at this other block again. Even at this one here, we had an order block at this point, a full order block. If I'm going to mark it up, we had a full order block. Price reacted to this order block before going to the upside, right? Before going to the upside. Before going to the upside. Now, there is something about this other block. Look at this other block, right? If you're going to make a trade now, you don't use this thing. You don't use this full thing like this. It's very, very poor to use, right? And that is when we go to refining other blocks. Refining other blocks, yeah, but then this remains an other block. This remains an order block. So when we look at refining other blocks, you know that you don't use everything like this. You can refine it to the least, maybe to the weak, and then you know that price will react to it and then buy to the upside, right? Price will react to it and then buy to the upside. Price will react to this other block and then buy to the upside and then buy to the upside, right? You react, that price will react to this thing and we buy to the upside, and here is your play. Yeah, price react to this and then buy to the upside, and there is the TP. Remember, your SL will be below here and your entry will be above, right? Same goes with this one. Your SL will be below this other block, right? And price 19 price 19 and give us a quick one. Yeah, so all these things are your other blocks, right? We have some of them here again. That is from to mark everything here, right? We have another block here, price giving reactions at that point. Now let me see where price reacted from on this point. So this is your other block again, right? Here is your supply zone. So your supply zone will be your bearish order block, right? Your bearish order block. After look at this engulfing candlestick, like I said, the last candlestick. If I'm to mark all of them together, right? Yeah, so the last candlestick, price give a reaction at that zone. Price give a reaction at that zone. Price give a reaction. Just set your SS slightly, right? Then target this low. You target this low as your take profit target, right? You target this low here, right? Because we are in a downtrend and price will break lows. So you target this low as your take profit target. So that is for other blocks that I've just said to you now. That is for other block, right? Why is this name misbehaving? So a take profit target. So that is for other blocks here. So let's keep marking other blocks, right? Now looking at this structure here, I don't know if I should just zoom out for you guys. Yeah, looking at this structure here, we have another block forming here, right? We have another block forming here, right? Another other block at this point. The price, this other block haven't been mitigated now. Now that brings me to explaining mitigated and unmitigated other block. This other block at this point haven't been mitigated. It haven't been tapped on, right? Price haven't tapped on this other block, right? And this one also, it has been mitigated. This other block at this point, it has been mitigated. This one here, remember, every other block you see we are once unmitigated before price mitigates them. So here now was once unmitigated before price mitigated this region, and we sold to the downside, we sold terribly to the downside, right? Here is a bearish order block that formed that we sold from, right? Continuously. Here is a mitigated zone. Here, price tapped on this other block. It has been mitigated, right? Here it's been mitigated, right? Now let's say for this, for example, this zone that we have a block at this point. We have another block at this point, right? If you have to zoom well, we have another block at this point. Here remains unmitigated, right? We also have another block at this point. Here now, price haven't tapped on this other block. We need to see maybe a reaction at this point, right? We need to see a reaction at this point, right? We need to see price reacting to this zone, price reacting to this zone and sell to call it mitigated, right? It can be an invalidation mitigation, right? But then we need to see price react to this zone, price reacting to this zone, right? And then price reacting to this other block here, yeah, to call it a mitigated zone. But for now, it's unmitigated. Price haven't tapped on it. Yeah, so we also have another other block here. We have another block here, right? This one it's unmitigated, right? We have another other block at this point, a tiny one, right? All this one is unmitigated. Yeah, so all of those should I say bullish and bearish engulfing bar candlestick or pin bar that formed at the end of a trend that haven't been mitigated, right? Their price haven't touched on are unmitigated. At this point, we have another block at this point, right? And price mitigated it. Price mitigated this block, right? We also have another other block at this point, right? And here, this one got invalidated, right? So all these things are other blocks. They are all other blocks. So we have one here. Look at this other block here. We were looking at the other block structure I gave you, right? From yesterday review. I just did a quick recap on other block yesterday, right? This one formed in a form of a bearish engulfing back candlestick, right? A bearish engulfing back candlestick. And if we've done refining, I could have refined this thing to a very tiny one. But since we haven't done refining, so you set it as your normal thing. So this price reacting to this other block to sell, right? And also price reacting to this other block to buy. This is from a bearish order block and this from a bullish order block. Where we have a bullish a buy order from this price, right? We had a buy order from this price, and then we move to the upside, right? Yeah, so all these are for bullish and bearish order blocks, bullish and bearish order blocks. Yeah. So we also have another block at these zones, all of these zones, right? You see, order blocks cannot just come in form of a one candlestick. It can come in form of a bullish engulfing candlestick, right? Now I didn't say something, right? Let me say something quickly. Other block can come in the form of a bullish engulfing candlestick, a doji candlestick, right? A pin bar or a range. Well, what we have here entirely is a range. It's a range. A range mustn't be like this. A range mustn't be like this to be called a range. It mustn't be this way, right? A range can be this way, a range can be this way, right? You just need to see that it's ranging, right? It's ranging. You need to see the action there, price ranging. And we have this type of range here, right? Looking at this thing, all of these things here now, they are all other blocks. You see this thing as a whole, they are all other blocks. But us as an ICT trader, we don't use this kind of other blocks, right? But then we have other blocks at this point, right? We have other block here. We have another block at this point. The price invalidated, right? We also have another order block here, which is the one that price respected overall, right? We have another block here. We have another block here, and price sold out from this other block, tapped into it, and then look at the little snipe that price gave, sniped into it a little, and then we started selling to the downside. Yeah, so looking at this structure here, too, this structure here, looking at this structure, we have a bullish order block forming at this point, right? A bullish order block at this point, right? A bullish order block, right? We have a bullish order block forming here, right? And price reacted to it, right? We also have another bullish order block here, another bullish order block here, right? And price reacted to it, right? Price mitigated the order block, price mitigated this order block before buying to the upside, right? So we have another order block at this point. I don't, okay, this is a full one here, and price reacted to it. All these things are order blocks. These are bullish order blocks. Now for the bearish one, we had a bearish order block at this point. You need to see them being the last candle, right? The last candle there at the top before the sell occurred. So this is a bearish order block. The price tapped into it after after this thing formed, right? We had a minor change of character here, right? I'll show you that thing well. We have a minor change of character here. So price tapped into this first order block at the first time. Price tapped into this one first, right? And then tapped into this one the second time. And this was the last time price tapped into it before selling aggressively. And price sold aggressively. So all these things are marked, just say, are all order blocks, right? They are all order blocks. All of them here are all order blocks. So all other blocks. I've just marked for you here now several bullish and bearish order blocks. Okay, this is a bearish order block, right? This is a bearish order block at this point. A bearish order block at this point, right? This is a bearish order block at this point. A bearish order block at this point. So here we have the last candlestick. We remember. Let me do a recap for you one time again. We are in an uptrend, right? And we started reversing. Sorry, price made a trend, right? We started reversing, right? And want to go up. Before we go up, we are in a minor downtrend. Before we go up, an order block will be formed at this bottom, right? And it will be this bullish order block that forms at this bottom that will carry us to the upside, right? And after price has traded far from the bullish order block that will be found here, after price has traded far from this bullish order block that will be found here, price will come back, tap on this other block here before moving to the upside. Yeah, price will come back, tap on that other block before moving to the upside. Before moving to the upside. Yeah, so this is just a rough walk here. So and the opposite goes for, yeah, so there will be another block here, right? There will be another block here. The price will tap from. The price will tap from, right? And as price is tapping from this one, we are breaking structure, right? And price, this one now before we reversed, another block will form here, which will indicate the reversals, right? And then we happen to mitigate this other block again. We buy it to the upside, sorry, and the opposite will be for that of a sell, right? For that of a sell, for that of a sell, right? As for a sell at this point, as for a sell, we'll be in an uptrend. For us to sell, price will reach its peak where it will form a bearish order block at this point. And this bearish order block will lead to the sell. And then we may come back and trade, will lead to the sell, right? Will lead to this. Damn. Okay, so price will come back, right? Price will trade to this point, right? And as price has traded out of this point, this region, there will be an order block at this point. Another block will be at this point, more of like a supply zone, right? A supply zone. And price will come back and mitigate this supply zone before selling to the downside. Yeah, so and another supply zone will be binding here. Another supply zone will be binding here. Let's say price happens to create another movement. Let's say another tiny movement to the upside, right? Right. You see another supply zone here. There will be supply zones at this point. Here are all just to trap people into the market. Trap people into the market, and then we'll make our move. Right? Here at this point, an order block will be a bearish order block to sell to the downside, right? To sell to the downside at every highs and at every peak. So, oh God, I've destroyed everything I've done. Right? At every highs and lows, all of these lows have bullish order blocks in them. Apart from these ones, at this should I say my right hand, right? All of these places, see all of these zones here, all of these zones, they have bullish order block in them, bullish order block in them, right? Bullish order block in them, bullish order block in them, right? Bullish order block in them. Being bullish order block doesn't mean it will hold, right? We haven't looked at tradable order blocks. Here we have bearish order blocks in them. All of these joints here, here we have bearish order block in them. There will be bearish order block at this point, right? It can be in form of a range, an engulfing pattern, a dodgy candlestick, right, or a pin bar. So here we have a bearish candlestick in them. So these are the things you should look out for here. So I'll be rounding it up for today's section. Yeah, today's section on let's look out for those things again. 15 minutes time frame. 15 minutes time frame. Crazy. So I'll be rounding it up for introduction to order blocks. So far, you've been able to understand what order blocks are, and you could be able to spot and identify order blocks like we've listed, right? You are able to know how to set your entry, what point to set your entry in price in an order block, and what point to set your stop losses using an order block. And so far, you can differentiate and spot a mitigated order blocks and unmitigated order blocks. Yeah, so and I'm showing you live analysis on these things that we've just marked here. So this will be the end of this section on other groups for today, right? So furthermore, I'll be dropping an advanced content on other blogs here. So trust you enjoy this section and tend to practice back test as always, right? The person who puts in the more work tends to have more results than the person who does it once in a while, right? Yeah, so good luck seeing this video and I ensure you get the best of the results if you end up seeing this video to the end. Yeah, so yeah, I'm stopping here, guys. You all should take care and study as best as you can. Study, back test for tests. Yeah, so yeah, that marks the end of this section.